Hello my fellow freedom builders and welcome back to the channel. Today I'm gonna make a video about a single stock, a company called Square that you might know. And as you might remember the other day, I made a video about ARK Invest and Cathie Wood and how they could evaluate Tesla at $22,000. Now what I have decided to do is go through the main stocks in their ETF and analyze them one by one. And as you can see, number 2 on their list of holdings is Square Inc. And that is the stock we're going to have a look at today. Now, if you're located in the United States, I think you have heard of Square before, but if you're located in Europe, you might not have, because this is a company that is mainly doing business in United States and Canada, and then Japan and Australia, and I think maybe one other country. So Europe has not really been hit yet by this Square fever, but of course we can buy the stock. And if we are taking a look at the stock, there's no it comes to no surprise why people think it is interesting right now. As I mentioned in the ARK Invest video, I got a buy signal down here around the 70-75, and of course that would have been a good deal if I had been in. Now I am mostly in European stocks, so this was not in my focus, but it's always interesting to look back and have the rule-based investments to see when would we have entered. So there's no doubt that this is an interesting stock and it is still in an uptrend. Now the question is, do we like the overall case? Do I like it, and would I invest in it right now or on a later point? These points I will touch on today, but just after you have subscribed to the channel and liked the video, if you feel like doing so. All the files I'm going to show today and all the links to the different sites, I will put them in the description below. First of all, what is Square? Now, when we're looking at Square, and this is from their investor presentation here, let's see, we'll just make it like this. As you can see, they mainly have, they have two legs in their business. They have the leg focused on the sellers and one focused on the individuals. Now, what do? Well, they are kind of a bank, but also kind of a fintech company. And this makes it one more of these annoyingly hard companies to analyze. One of the reasons I mentioned that ARK Invest were seeing Tesla potentially going to 22,000 was that they said it was not just a car company. And at the same time, or the same way, you can say that Square is not just a banking company or a payment processing company. It is a lot more. So let's look quickly at the two legs here. This is not an in-depth view at the overall company, but just so that you can get a feeling of what we are talking about. Because as you know, the ARK K ETF is about innovation. They're looking for technologies that disrupt, that really comes in and disturbs the order and make something completely new, never seen before. And we could argue that Square has done that, because what they are in the seller's leg is that it is a payment management system, and it is a way for small shops, specifically small shops, restaurants and small retail stores, to process payment in an easy way. But it's a lot more than just that, because if it was that, they would just be another, I know that PayPal is coming in, competing here. We have the Visa and MasterCard, we have Apple Pay, we have all sorts of stuff. But they're trying to be a lot more. Let's say, for instance, here we have a small business owner, and that could be specialized on restaurants or other retail. It could be that they lacked a good system to pay the salaries for their employees. Well, then this system can do that as well. They just got their banking license so they can hold people's money. They have a virtual terminal. They can issue a Square card. They can manage an entire e-commerce website. You can measure customer engagement. You can write your invoices, make appointments if you are a hairdresser, and so on. So all of this is within this seller's system. Now, if we just draw a little here we go. We have the one business leg here. Now, this is a system that is extremely helpful to the small retailers, the small shops, and they are planning to get up the gear so they can have medium-sized companies as well, and I think they're aiming for some larger companies too. But there is a lot more, as I mentioned. This one is right now doing around 65% of the revenue, and it is growing, but not as quick as the leg over here. Because what this leg does is that this is the personal finance leg. This is where you can actually have your money. You can receive instant deposits, meaning that, for instance, here the shop owner is going to pay your salary and he or she is depositing right into your Square app or your Square account. You can also send money from another Square account to this person to person. You could use it as an ATM. You can have a cash card. You can actually, there is these cash boost when you are trading in buying something in a store that has the Square system. Then you can get a discount if they offer that. Recently, they started to offer cryptocurrency trading that you could actually buy, for instance, Bitcoin, through the Square here. And as a new thing, you can also trade equities. This is very new, but something that could come up. So here we have the two legs. One is the business part, one is the personal part. And what they are trying to do is kind of make one big universe where people are tied up in the Square system. I've heard several analysts comparing this to the Apple ecosystem, where you have the laptop and the iPhone and the iPad and iTunes and iTV and the Apple Pay and so on and so forth, so that you never shift one of your items away from Apple because it's all tied neatly together. The same thing as I mentioned with Tesla. I saw Tesla as a kind of a Apple model where they were tying it all together, and that is actually what Square is trying to do as well. So they're trying to be a bank, but also being a payment system and a personal finance system and a stock trading system, and it is all in one ecosystem. And this is actually very innovative, and there are other companies trying to emulate this, and they have a lot of competitors, but not many of them are as widespread in the different functionalities here as Square is. So this is extremely powerful, and I do understand why Cathie Wood and her team in ARK Invest, they think that this is innovating and disrupting. No doubt about this. If we're taking a quick look at some of the numbers, we can just see here. This is some very good growth. Here is this is up until 2019. You can see this is a seller gross profit and the cash app. This is a personal finance, and you can see they are growing very nicely. And over the last 3 years, the cash app is starting really to take off. And many analysts think that the cash app, the personal app for your own personal finance, is actually going to be one of their largest legs. Absolutely. So there's a lot to work with there. Let's have a look at some of the numbers, because they're actually looking fairly decent, to be honest. Comparing it to being an innovative, not startup, because they have been in the game for a while, but at least a disruptor coming in. Many of them are burning a lot of cash, but actually not Square. They are making money. Right now we are in the Stockopedia here. There's a link to that below as well. You can see the earnings quality is great. The momentum is very good. Stock rank, we like to be 70 or above, but the reason why this is 60 is that they have an extremely bad value. And this is one of the things I'll touch on today. When we're looking at the numbers, we can see they have a forward PE ratio here at almost 200, meaning that you're paying $200 for each dollar of profit. That is not very good, but of course we need to look at their growth, and when we take the current PE ratio and divide it by the estimated growth, which is gonna be great next year, then we get a PEG ratio that is actually decent. I do like it to be below 2, but there are different companies that are in different sectors where, for instance, this disruptive sectors where they are burning some cash but to grow quickly, and the PEG ratio can be a bit higher here. So not a completely crazy PEG ratio, but this growth is not estimated to keep going on. It is gonna drop somewhat the next 2 or 3 years, so the PEG ratio at that point will probably go up to around 5 and 6, which means you're paying quite a lot for future growth. Right now, return on capital, return on equity, and operating margin are decent. They have Petrosky score at 7, so that is great. If you're looking at the earnings per share, you can see that they have been making money. I think 2019 was the first year with 4 quarters in profit, and as you can see, 2020 is going to be a bit of dropping a bit the earnings per share here, but then 2021 is estimated to be great. I'll have a look at that later because I'm not certain that these are completely updated here. If we are looking at the free cash flow, let's see if we can get the graph here. That is going nice and smoothly upwards. So they do have money, and we can see that also on the working capital. They do have cash in their hands to work with, and their net debt is negative, meaning that they are net not in profit, but they don't have debt if you're looking at it all together. So of course they have some debt, some short-term debt they always have, but they can easily pay their interest. No problems there. Sales growth, great. Now, the problem with some of these ratios is that, for instance, the price to sale, that is something that I often look at when you're looking at financial companies. And in a normal bank, price to sale, also often set PS here, is somewhere 3, 4, 5, meaning that the price should not be more than 3 to 5 times the overall sales or revenue. And this is 11. It's actually been dropping a bit, so it was almost 12 the other day. So what we can see here is actually that if we are gonna evaluate this company as being a bank, then it is very expensive. Also, we can see that here on the value part. So maybe we should not look at it as a bank, but that is the entire discussion why some of the analysts are saying this is a complete buy, and some of them is saying no, it's a bad sell. Right now the analysts are going a bit downwards, I think, maybe. Yeah, going a bit downwards towards hold, and that is because that the estimates in earnings per share is actually dropping here 20 and 21. We'll have a look at that in a second. We can just look into SACS here. What we see here is that they have these lines here. It can be a bit confusing to look at, but these are how the estimates for the future has developed over time. And what we can see, these two lines here are the earnings per share estimates for 2020 and 2021, and they have been dropping. And that means that the analysts are seeing a future the next couple of years where Square is actually not making that much of money. Of course, they are making money, and that's positive, but they are not they're not growing as quickly as they have been used to. Now, sometimes I also look at the platform called Guru Focus. It's actually also a very nice platform here. And as you can see, there are a lot of different numbers. We can see the Altman C score, it's a very safe and so on. But what we can see over here in the valuation rank is, as you can see here, I mentioned the price to sale ratio. I'm not sure if this one is the right one or the one from Stokopedia, depending a bit on what date you're taking your numbers from. But as you can see here, compared to industry, the industry that they put Square into, when this is red, it means that it's a lot worse than the overall industry. So they are valuated very, very high here. P ratio, forward P ratio, and so on. They are red pretty much all over compared to the industry. Some of them are green compared to their own history, but that doesn't mean too much here. We can also look at FastGraph, which is a little piece of software here, a website I haven't used for a while, because I've used it more for my stock of the week video, where we took some more solid stocks to look at. But what it shows here is we have the black line, which is the price. We have the blue line, which is what is called the normal PE ratio over time, some sort of average here. And then we have the adjusted operating earnings down here. And what we can see here is that sometimes we can see the price of the stock oscillating around one of these two lines, and we can see that sometimes it is getting really high up, meaning that the stock is actually overvalued. So right now we can see that the stock price has gone up like crazy from down here around 10 and then up like 10x. But the earnings, they started to make some profit, some operating profits here in 17, and that has not gone up in the same speed. So this is, of course, the dotted line here is the estimates. They're estimating to take a dive here and then go up again. But what this tells us is that seen from a value perspective, it is very hard to see why we should buy this company right now. Well, we can also look at it because they're quite good on the EBITDA side. So if we are looking at that, the EBITDA per share, then we can actually see that we have had a company that have been oscillating somewhat around this growth line. And if they can keep their EBITDA per share growing in the same way they have been, well, then there's definitely some earnings to be had. We can look at it and in the forecasting mode here, where we can see that if going forward they are having these growth numbers, as they say, if they're just following the mean growth line here, then we can actually see a growth in the stock, or at least theoretically at 50% per year. So that is okay, but of course that depends on the overall market, because there are some risks involved in this company. I have a lot of numbers here, but I have taken them all from the material I'll be linking to, so you can read more about the stock itself. But you can see here that the number of active sellers are going up, the gross profit per seller is going up, and of course that is a good thing, that you get more customers and that you're making more per customer. So that is great. We can also see here that they are making more and more money, or this is gross profit, but they are just climbing slowly upwards. Now, $172 million, that is accumulated profit, I should say. It just went wrong here. And this is, of course, showing that they are earning a bit more every year, but this looks very nice with $72 million, but that is all together from all the way up here. So they're actually not making that much money. They are making money, but compared to the insanely high amount that they are evaluated with their market cap right now, then you could say that they were very expensive. Now, you could say the same about Tesla. You could say the same about several of the companies that ARK have in their portfolio. But let me just have a quick look at some of the risks that I think is involved here, because there are some risks that make me a bit skeptical and actually makes me not want to buy the stock right now. Of course, there is a valuation part, but it is a growth stock, and maybe we should not look at it as to the earnings, but more look at it as to a disruptive company that is going to explode in size. But there are some risks, and I'm going to mention some of them now, and they come here. First of all, they have some currency risks, and it's not something that's going to make them go bankrupt or anything. But since they have some business in the United States, but also some in Canada and Japan and Australia, there are some risks. And if you have seen my videos about the potential drop in US dollars, then this is definitely something we should be aware of in the process of choosing the right company based in the United States. Then there's, of course, a competition. Right now, I think actually today, Apple has announced some new, I think it is an acquisition of a small upcomer, but they are moving into this space as well. And we have to remember that Square is just Square, but Apple is moving in on this territory, and they are so much more. They have a huge fund of capital laying around for projects like this. I don't recall if it's $700 billion or something like that, but they have a lot of cash ready to invest, and they are ready to move into this area, this sector, because it can be very lucrative if you are all of a sudden a bank and you're sitting on the entire ecosystem of people's money. And if Apple really goes into this and they are competing with Square for real, then you would have a lot of Apple owners that would have a lot easier time with all of their iPhones and iPads and iWatches and so on and so forth, just using the Apple Pay. Where the Square, the Square company, the Square product, they don't have the same ecosystem yet. They're building it, but Apple, I think they are a bit ahead here. And if they are coming quickly into this area, then that could mean some serious competition. Then, of course, there is the PayPal and the Visa and the MasterCard and you know, all of the competitors in this space. I was just reading up on the competitors, and I can see that in the United States there are at least 10 of these sort of companies that I have never heard about before. So there are enough competition, no doubt about it. But the good thing is they're not burning money, so they can actually grow with some of the money, some of the cash flow they're making. Then, of course, there is some legislation issue. And this is, especially after, or even more after 2008, where a lot of the banks were in trouble, there have come a lot of legislation in, and that can easily be changed. And one thing is that Square might be doing fine in the United States, but each and every country they will expand to, they have different legislation, and it can't be a hassle, and they can have a complete entire market disappear pretty much overnight with new legislation. So that is something we should keep up to date on. The industry standards can change. The banking system can decide that they want to use a specific standard, and that can be expensive for a company like Square all of a sudden to be able to shift over to that standard. Then there's the entire virus situation right now with the crisis, and that is it may be not something that is going to affect Square in the next 10 years, but over the next year or two, that is actually one of my main concerns. Because when you are in business by having these sales stations and this entire ecosystem built up around small retailers, small restaurants, and we can see right now in the current situations that they are dropping like flies in the United States. I saw a number, I can't even remember how many thousand restaurants that was temporarily closed, but where they figured out that around 25 to 30% of them were actually permanently closed. So that was 1/3 of the small restaurants, of the restaurants that were closed right now, that is going to be permanently closed. That means that a company like Square can really take a dip in their revenues, because what they're making money on the retail side is that they're taking somewhere between, I think it is 2.75 and 3.75% of the sale, simply to process it all. And if all of a sudden there's $1 billion or $2 or $10 billion less spent in these small shops, then that goes directly onto the Square revenue line and brings that down. So I think this one can really put a stop to some of the growth here in 20 and 21, depending on how the situation evolves. Then there's a Bitcoin thing. They have actually started to make some money on the Bitcoin, but right now it is a bit hyped again, and it is going up. If all of a sudden that takes a drop and nobody wants to use it, that can also be some sort of a risk. And then there's a risk that is actually combined with this virus sales drop here, and that is that if we are just taking a look at their plan again here, so one of the things that they are doing is that they are providing loans to these small shops, meaning that a retail shop that cannot borrow money in the bank, they can actually often borrow money from Square. Square has the advantage here that they can see all of the data. They really have some big data advantages here, because they can see how much they sell the shop, if it is growing, if it is dropping, how much they're making on each sale. They can take all of this data out and pretty much within a day say if they can grant a loan to a shop or not. So they are, being a bank now, also lending money out. The problem here, of course, is a bit The same problem I see with all this peer-to-peer lending, all of this crowd lending system that has been so popular the last couple of years. And it is that when you are loaning money to this sort of ventures, and it is ventures that cannot borrow money in the bank, then of course you're taking on some more risk. And I know that Square knows a lot about their customers, but if we really see this huge blow to the retail sector that I think we're going to see over the next 6 to 12 months in the United States, then it can be quite expensive to have a lot of billions of dollars lend out to these sort of ventures. So I'm a bit nervous from the Square point of view that they might have been very exposed to some very risky lending here, but let's see how that turns out. So that is some of the risks. Of course there are more, but these are some of the risks that just popped up in my head. And if we're looking at this, we're looking at the situation right now with the virus, and where I think Square can actually be hit on several fronts, both on the sales here and maybe on the investment part, and also on the loans for this risky segment. If we're looking at that, if we're looking at the high valuation, and we're looking at the prices here that has gone up from the bottom down here and up until now, has gone up 325%, something like that, from it bottom out here in March, then I think that Square is an interesting company, but I would not invest in it right now. Now, you might sit here and maybe you have shares in Square, or you're thinking about buying it, or you're a big fan of the company, and you're saying, well, you don't know anything, Hans, this is a great investment. Well, then it's good I'm not an investment advisor, because you should always take your own decisions here, make your own advice here. What I'm saying is that combined all together, the extremely high valuation, the estimates for some dropping revenues and earnings per share, the situation in the world right now, the uncertainty with the US dollar and the currency risks, Square lending money out to small risky businesses that cannot borrow money in the bank for some reason whatsoever, then my evaluation of the company right now is that I think it is too risky. I would not personally put my money into this. I can see a lot of the analysts that were doing a great job, that were calling it great value down here, and I can completely see that. But since then it has gone up 60, 70, 80%, and right now I think we need some sort of we have to take a look at it and evaluate if the world, if United States is actually going into some sort of economic slump. We saw the GDP data the other day that was terrible in the United States, and that will inflict on the prices here, I think. But then again, we have seen Hertz and all of the other companies just going to the moon, even though they were bankrupt. So it can be that in a month, this is in $1,000. But I'll not really be irritated about that, because I make my analysis. I have my principles, my rules that I invest from. And this is simply not one of the stocks that is going to fit into my portfolio. I hope if you're sitting with a stock that it goes to 1,000, I always like it when people make money. That's all for now. I hope this was some sort of inspiration for you if you didn't know the stock, or if you hadn't researched it very thoroughly. So take care of yourself, take care of your money out there, and I'll talk to you again soon. Remember to subscribe to the channel and like the video if you found it valuable. Bye for now.